What is up, guys? This is Yix here, Magna Crypto, and welcome back to another video. And I hope you're having a good weekend. So today's video, I'm going to do a market update. We're coming to the end of a weekly candle, so it's always good to look at, what the outlook is looking like for, this closure and then going into next week. And also, I found a few articles that I found quite interesting, so I thought to just go over that and share that with everyone. So without further ado, let's get straight into it. So let's look at the big daddy, Mr. Bitcoin. We are still in the bullish flag formation. Obviously, we've converged between these 2 points, broken out, with quite strong momentum. We broke out and hit the next level of resistance, retested, and this week's candle has been, just very, very low volume, as you can see, just a very thin candle. It's about to close today, but it's still very much retesting this counter trend line. So there's still a chance for this to just kind of break upwards because the chart pattern is still in play. As it's still bouncing off that counter trend line, we can still see, that breakout with strong volume is still a very strong possibility. And I think now that we've come into the 3rd week of just retesting, or the 2nd week of retesting this trend line, I think there's a good chance of it going higher. So that's what Bitcoin is doing at the moment. So we're just going to stick to the weekly candle because we are at the end of the week, so we can just kind of get a nice end of week overview of what's happening going into the next week. So let's look at Ethereum next. So with Ethereum, again, we've broken past that long-term trend line, retested this support line, which was support over here. It's not the strongest of support, so there is a chance that we could break below and retest the next support level. This is a bit stronger, as you can see. A lot of it's been used as support a lot in the past, a resistance, and again resistance over here. So there is a chance that we could break this and close below and then retest this support level again. So that's how Ethereum is looking. Not amazing. Again, volume has really been low in the last week for Bitcoin and for Ethereum, and it is the same for XRP as well. So volatility has reduced. Obviously, we don't know how long it's going to be at a low level, but this is an indication that there is going to be some kind of explosive action imminently. And last but not least, we have XRP. XRP not looking very good at all. We closed below this support level, which we bounced off of kind of this zone, bounced off of there, and have now closed below that. So it's looking more likely that we'll be going lower to retest this support level over here. It was support previously back in 2017. So that's, and you can also see a couple of wicks going to that level. So that's the next level of support. And if not, we'll be going low to that. So potentially 17.6 or 16 cents. But not looking good because it's closed below this level of support for the 2nd week, or will close for the 2nd week now. So not very good at all. So let's get into the actual articles. Some, as I said, very interesting ones. So we have Deloitte, who did a survey on some executives, some 1,500 senior execs and practitioners from large companies from 14 different countries, and this is its 3rd annual study. So obviously that's fantastic. The more data, the better. So we have an understanding as to what's happening in the market. And what it's found that large organizations are increasingly growing fond of actually employing the technology instead of regarding its great potential. So these are the questions that they ask all the senior execs. So you can have a little look, but the kind of summary of it is, as seen on the graph above, a lot more execs responding now that DLT will eventually achieve mainstream adoption. And that there's compelling business case for it, and that if companies fail to use it, they will lose a competitive advantage. Interestingly, the percentage of people considering blockchain as overhyped has also increased. So this is fantastic, like that they realize obviously DLT is the next evolution on the internet, and they've realized that if they don't catch on quick, they're going to lose that edge to someone else. If someone else adopts it and they haven't, they're going to be trying to play catch up. And in business, obviously, it's very cutthroat. So if you're trying to catch up, you're behind. That gap could widen very, very quickly, and before you know it, you've lost, or you've been relegated to the absolutely, the bottom of whatever industry you can think of that didn't adopt it. So for them to say that is really, really encouraging. Obviously, there's a lot of data here, 1,500 execs, Deloitte doing it, so it holds a lot of weight, this data. A survey reveals that companies continue to put hard-earned dollars into blockchain initiatives. For example, 80% of respondents said that they are hiring staff with blockchain expertise or plan to do so within the next 21 months. So that's increased by 9%. Due to this development, Deloitte concluded that while blockchain was once classified as a technology experiment, it now represents a true agent of change that is affecting entire organizations. Again, that's what we like to hear. That's what we knew from the start, those of us that have been in the space for a little while. And naturally, any new kind of technology that comes to the forefront is a test, it's an experiment, and then people have to use it to see if it actually is useful. And that has been the case. Now it's been a little bit of time, time has passed, companies have used it, and they're seeing the actual benefit of it. So now it's reaching its next stage in its evolution, which is adoption. So the real life blockchain production. So some of the use cases, so the Vanguard group. So most people know Vanguard, where you invest into different funds. Probably one of the biggest companies where you can actually invest in these different funds. They complete the first phase of a blockchain pilot designed to digitize the issuance of asset-backed securities. And like we've spoken about this before, when it comes to, as I said, asset-backed securities, what we call STOs, that's the next step for kind of these securities that are more illiquid. If they get that on the blockchain, they'll become more liquid, more easily tradable, and that will open up a lot of these securities to a much bigger target market, or to a much bigger market, which will be fantastic for everyone else because they can actually start investing in them. Because once they become more liquid and tokenized, you can own smaller parts of these securities, which has never been the case. So again, fantastic that Vanguard, out of all companies, a huge company, they're at that stage. Another example came from US newspaper New York Times. Its R&D team tested a DLT-based project attempting to tone down the increasing number of misleading images on the internet. Again, fantastic. Deloitte's report reaffirms this trend and indicates that the percentage of respondents saying that their companies have already brought blockchain into production have risen from 23 to 39%. Massive increase, and it's only going to keep increasing. And these are some of the regions for DLT utilization. So moving on to the next article, a bit of a quick one, but this is just good exposure for the whole crypto space, well, mainly Bitcoin, but also the space as a whole. Land Rover has acknowledged Bitcoin. They did a 50th anniversary of one of its prominent models, and I think it's the Range Rover. And in the video, it mentions like key dates in a timeline, just important things that have happened, and it highlighted Bitcoin as being one important event that happened. And I'll show you just a quick clip of them saying this. But also, Jaguar Land Rover, which is the company that made the Range Rover, was actually involved in crypto even a year or two ago. Was it a year? Yeah, in 2019. So the holding company Jaguar Land Rover, which is part of the Tata Motors announced in April 2019 it was testing software to allow drivers of its cars to earn the IOTA digital asset as a reward for sharing data. The firm began development stages to implement a smart wallet into its vehicles. Upon launching it, drivers would be awarded IOTA coins to enable their automobiles to automatically report useful data such as traffic congestion or potholes to navigation providers or local authorities. So IOTA is all about the Internet of Things, and it's a very, very scalable cryptocurrency project. It's had its hands in quite a few projects, one of them being Jaguar Land Rover. But I spoke about this a year ago, so and Land Rover confirmed this. But in terms of actual production, they had a little test station of like a gas pump or electric charge station where they could do that automatically. But since then, they haven't really come out with a lot of things, so I don't really know what's happening with IOTA. But still, fantastic exposure. Here's the ad. There you go. See it again. Bitcoin network created. 104,000 people have seen this. Exposure, can't complain. And this, the Federal Reserve gets Bitcoin right, says Peter Schiff. But here's the catch. So, according to a new publication of the Federal Reserve Bank of New York, Bitcoin is not a new type of money. The authors argue that it's a new type of exchange mechanism capable of supporting money transfer. And I mean, that's literally what the white paper said, that it's a new peer-to-peer monetary system outside of the financial system. So that is exactly correct. According to Bitcoin's white paper, Bitcoin is a purely peer-to-peer version of electronic cash that would allow online payments to be sent directly from one party to another without going through a financial institution. And Michael Lee from the Federal Reserve, an economist at the bank, argued that Bitcoin doesn't represent a new type of money, but represents a new form of exchange mechanism that can support the transfer of monies as well as other things. To reach this conclusion, the authors divide money into 3 different categories, namely fiat money, asset-backed money, and claim-backed money. They also look at 3 different types of exchange mechanisms: physical, electronic with a third party, as well as electronic transfer without a third party. I would somewhat disagree with that, in that it is not necessarily money. So, I mean, in my opinion, gold is probably the realest form of money that actually holds its value, and has been tested throughout time. This is definitely a new form of exchanging value. So it's like, the white paper says, it's a new monetary system, but the value is only there because people believe it's there. It's because of its utility. And at the moment, people think it's more of a digital gold as opposed to actual monetary system. So we'll get into the article a little bit more, because Peter Schiff makes an interesting comment that I somewhat agree with. So Peter Schiff's tweet in regards to the actual report, he said the Fed gets Bitcoin right. It categorizes it with fiat in contrast to gold that has real value. Sees nothing new in Bitcoin, just in the way it's exchanged, as coincidence in both traditional and crypto fiat is lost. Savers will return to gold. And he continues to say, indeed, the paper did say that Bitcoin is just another example of fiat money, after outlining that fiat money corresponds to intrinsically worthless objects that have value based on the belief that they will be accepted in exchange for valued goods and services. So, I mean, I agree with that it's similar to fiat in that it's not, backed by something of real value, aka, i.e. precious metals, which is actually something you can hold. It's been time tested, millennia. Whereas, Bitcoin is a new monetary system, but intrinsically it doesn't actually have any value. But the big difference between Bitcoin and fiat, apart from the fact that it's blockchain based, is that there's actually a finite number of Bitcoins, 21 million, as opposed to fiat money, which can be and is printed to infinity. So that's the biggest difference, where fiat constantly gets printed and keeps losing its value because of this, QE unlimited. Bitcoin will always remain the same in terms of how many tokens there are, how many Bitcoins there are. So that's a massive difference, and that's why it'll hold more of its value. But in terms of the confidence part, I do agree with him there. If people lose confidence in Bitcoin, it can lose a lot of its value. To what extent, no one knows, because its main use case at the moment is a store of value, because it's not a very efficient, electronic payment system, because it's just slow. If more people start to use it, it'll be even slower, and it's just very, it consumes a lot of energy, which is just, a big negative in terms of, if it was actually adopted worldwide, it would absolutely crumble. It wouldn't be able to handle it. So if people lose confidence in store of value part, then, that's going to be a massive blow to it, and people probably won't hold it anymore. So I do agree with him on that part. But it's not, it wouldn't say it's like fiat currency. So next we have Peter Brandt, famous for calling the kind of the break in the Bitcoin parabola. This tweet is absolutely timeless. It ages very nicely. So when it broke that parabolic rise, the parabolic advance log, he said it will lose 80% of its value. And he is an absolute, OG in when it comes to TA. So, he's absolutely spot on with that. And it did lose more than 80% of its value, absolutely plummeted to about 3,100, and it started to rise again. Now he's basically said that, it's time to buy. It's looking at the best time to buy, and he's recommended it to all his family members, including tech stocks like Tesla. So he's telling all his kids to get involved, get at least 10% of what you can into Bitcoin, and dollar cost average basically. So, from someone who is a pure technical analyst, this is good to hear. It's, bullish news. So there's still time to invest. So for those of you that have not invested, do so ASAP. Next we have VITALIK BUTERIN talking about the DeFi interest rates. That's one of the main kind of marketing tools that a lot of DeFi use. The fact that it's got high interest rates, much higher than traditional banks. But Buterin did say that don't get too blinded by this fact, because we're basically not there yet where we can actually properly give those high interest rates. He said, according to him, decentralized finance should not be about optimizing yield. Rather, we should be solidifying and improving a few important core building blocks: synthetic tokens for fiat and a few other major assets, aka stablecoins, oracles, decentralized exchanges, and privacy. And he also said interest rates significantly higher than what you can get in traditional finance are inherently either temporary arbitrage opportunities or come with unstated risk attached. So, it's a big red flag given by VITALIK BUTERIN. He's saying that we got to listen to him, so we're just not, obviously DeFi space is advancing constantly, but we're not quite there yet where it's risk free. So we got to be careful with our money and investments, and take it one step at a time. And another prominent person within the crypto space, especially if you're an XRP holder, David Schwartz. So David Schwartz says surprising levels of hostility in the crypto community are hampering the growth of the industry as a whole. He said I think the one thing that's kind of surprising to me is sort of hostility to innovation in a lot of space. And a lot of that comes from people who have invested heavily in a project. I can't talk about cryptocurrency space without facing the reality that if you think Bitcoin is going to take over the world, probably own some Bitcoin. If you think Ethereum is going to take over, probably own some Ether. If you think the XRP ledger is the greatest thing in the world and everyone's going to use it for everything, you probably hold some XRP. Schwartz explains the implications of cherry picking in the perceived flaws of digital asset. Someone tells you, hey, Bitcoin has this problem, Ethereum has this problem, or the XRP ledger has this weakness. If they're right, then you'll perceive yourself as losing money. And what happens is people dig in very, very deeply, and everybody is invested in a project that doesn't exist yet. So there's a sort of hostility to innovation. And he basically took that back and related to his previous job roles in the legacy financial system. And he said all the existing banks and financial institutions want you to build on top of their existing technology because that's what enriches them. Same thing that has happened in the cryptocurrency community. People are now saying, no, build on top of Bitcoin because I'm invested in it. Build on top of Ethereum because they're invested in that, etc., etc. So, he's very right, because when people are invested in different projects, obviously they have a vested interest in that doing well, and any other project that does well is a threat to their investment. So, it's become about purely what you've invested in, and instead of like the whole space kind of developing as a whole, instead of trying to get the whole community to work together. This really hampers interoperability and kind of communities working together, because Bitcoin community hates the XRP community. So there will never be any synergy between them. They'll never work together, which is a huge problem. The more these kind of projects work together, the more innovation there will be. So it's gone back to very tribal, basic, societies in a way, which is not good. We want more interoperability, and we want the whole space to develop. And this kind of tribalism really doesn't help at all, because, if you see another project do well and you just bash it and absolutely try to take it down, this is obviously going to stop other, developers wanting to do anything to develop the project, to develop the whole space. If the Bitcoin community tries to trash every other community that is trying to develop, then obviously this is going to really discourage a lot of other people outside of the crypto space to get involved, if they think that they're going to get absolutely trashed if they try to do something that isn't part of the Bitcoin realm. So yeah, I absolutely agree with him, and this is really, really bad for the space. We need just everyone to work together, especially because we're in such a early stage of crypto. If Bitcoin does well, everyone does well. If Ethereum does well, everyone's going to do well. So yeah, we don't really need that. So that'll be all for this video. I hope you got some value from that, and see you in the next one. Peace.